For years, Americans have been told a comforting story, one repeated by politicians, echoed by economists, and reinforced by the constant hum of financial news. The story insists that the United States economy is unshakable, that its institutions are resilient, that recessions are temporary, and that the worst crises are behind us. It's the same narrative that allowed millions to believe that growth was permanent, inflation was manageable, and the financial system was built to withstand shocks. What if the real danger isn't a sudden collapse, but the slow creation of a perfect storm, a blend of debts, decisions, technologies, and global shifts converging at the same moment? What if America is on the edge of an economic reset, far bigger than anyone is willing to admit, in 2025? Something unusual is happening. But in many banks tightening credit, even as they claim stability, inflation cooling on paper but rising in the real world, global powers reshaping currency alliances, and digital money quietly becoming a central theme of every financial discussion. Experts from major institutions, people who rarely agree, are suddenly sounding similar alarms. The words reset, realignment, and systemic risk are appearing everywhere. And yet, the public remains in the dark. Today, we're going to explore the full story, but the underlying forces that could trigger America's next economic meltdown, and why 2025 may be the year everything changes. And by the end of this video, you will understand why so many experts believe the reset is no longer a question of if, but when. To understand how America arrived at this moment, we must go back, far back, because financial systems don't collapse suddenly. They erode quietly, slowly, predictably. The seeds of every crisis are planted decades before the first shock appears. The modern American economy was built after World War II, during a period of unprecedented strength. The US dollar became the world's reserve currency, not because of chance, but because of confidence. Nations around the world believed in the United States, its stability, its resources, and its unparalleled economic engine. That trust created a powerful feedback loop. The world used dollars, America printed dollars, and the global system depended on America continuing to grow. But hidden inside this system was a flaw no one wanted to talk about. A flaw that quietly expanded like a hairline crack in a dam. The flaw was debt. Public debt, private debt, corporate debt, a debt dependency that grew decade after decade. And every time the economy slowed, America found the same answer: spend more, borrow more, print more. From the 1970s, when the gold standard broke, to the 1980s financial deregulation, to the 2008 crash, and then to the unlimited money printing during the pandemic, the trend was the same. Each crisis was met with a solution that created a bigger crisis later. Every shock was treated with temporary fixes. Every warning was ignored. Every prediction of long-term consequences was brushed aside in the name of short-term stability. But here is the twist. The very strategies that saved America in the past are becoming the reason it may collapse in the future. And 2025 is the moment when all these old decisions begin to collide. We now move into the heart of the story of the origins, the rise, the breaking point, the fallout, and the failed fixes that brought us here. The origins of America's coming meltdown can be traced to three core developments: the end of monetary restraint, the rise of financial engineering, and the political addiction to debt. But the most significant turning point happened in 1971 when President Richard Nixon ended the gold standard. Without gold backing, the dollar became entirely dependent on trust. It allowed the US to print money freely, expand credit at unprecedented levels, and shift from a production-based economy to a consumption-driven one. During the 1980s and 1990s, deregulation allowed banks to merge, leverage assets, and take risks that would have been illegal decades earlier. Wall Street evolved from a place of investment into a place of speculation, where money could be multiplied with algorithms rather than manufacturing. Financial engineering replaced real economic growth. No administration, Republican or Democratic, to face the consequences of saying no to spending. Instead, the government borrowed more each decade. The national debt climbed from $1 trillion to $5 trillion, then to $10 trillion, and now over $34 trillion. By 2025, the interest alone on that debt threatens to surpass defense spending. This was the beginning of the slow malfunction we live in today. But origins alone do not cause collapse. The next phase accelerated everything. From 2000 to 2020, the U.S. economy experienced one of the largest credit booms in history. Technology surged, global trade expanded, and speculation became normalized. Asset prices from homes to stocks to crypto. People believed the boom was permanent, even though it was mostly built on cheap money. This created an artificial environment where risk-taking was rewarded and saving was punished. The 2008 crisis should have been the wake-up call. It revealed how fragile the system truly was. But instead of allowing the system to reset naturally, policymakers chose a different path. They bailed out banks, printed money at levels never seen before, and expanded financial engineering even more. The message was clear. No institution would be allowed to fail. And that message created moral hazard. Banks, corporations, and even governments took more risks, knowing the Federal Reserve would always step in. Then came the pandemic, a global shock that pushed the system beyond its limits. Trillions of dollars were printed in a short period of time. Debt skyrocketed, supply chains collapsed, inflation surged, and now, in 2025, we are living with the consequences. Every economic meltdown has a moment when visible cracks suddenly become undeniable. In 2025, those cracks are everywhere. The first major crack is inflation, persistent, uneven, deceptive inflation. While official numbers claim inflation has cooled, everyday Americans see the reality. Food costs are up, rent is up, insurance is up, energy is up, and the dollar buys less than it ever has. The second crack is banking stress. Throughout 2024 and early 2025, a series of unusual events occurred: banks reporting liquidity issues, sudden tightening of credit, silent capital withdrawals, and slowing loan activity. The third crack is global deflation. Major nations are forming alliances to reduce their reliance on the US dollar BRICS expansion. Digital currencies backed by commodities and bilateral trade agreements that bypass the US entirely. The world is shifting, and America is losing the privilege that once made it untouchable. The fourth crack is political paralysis. As America enters another election cycle, both sides of the political spectrum are divided on how to handle the economic crisis. But here's the deeper danger. No matter who wins, the structural problem remains. The debt is too big, the system is too fragile, and no politician wants to tell the public the truth. These cracks bring us to the edge of the next stage, the fallout. In the fallout stage, credit tightens, tax revenue falls. This is the moment experts refer to when they warn of a reset. A reset is not a single event. It's a chain reaction. When the US can no longer sustain its debt, when its currency loses global trust, or when its financial institutions cannot support the loans that keep the economy alive, the system has to change. A reset means one of three outcomes: a massive inflationary explosion, a deflationary crash, or the creation of a new system, digital, controlled, and centralized. All three scenarios are already being discussed behind closed doors at economic forums, central bank meetings, and government panels. And 2025 is the year when these discussions start turning into reality. America has tried to fix these problems many times, but each fix has failed because it addresses symptoms, not causes. Lowering interest rates creates bubbles. Printing money masks temporary pain but creates long-term instability. Cutting spending is politically impossible. Increasing spending makes deficits explode. Even new technology like digital dollars or central bank digital currencies may offer tools for better control, but they don't solve the underlying mathematical limits. You cannot print your way out of a debt spiral. You cannot legislate your way out of inflation. You cannot innovate your way out of fiscal error. These failed fixes are why experts are warning that 2025 may be the year the system reaches a point of no return. Connecting to modern parallels, shocking data, and historical patterns, history is clear. Economic systems collapse when debt overwhelms growth, when trust erodes faster than stability can be restored, and when nations assume their dominance will last forever. Rome fell this way. And now, the United States is following the same pattern. In 2025, America's debt-to-GDP ratio is at near. Household savings have collapsed, corporate defaults are rising, bank lending is shrinking. Inflation-adjusted wages have stagnated, and geopolitical tensions are accelerating the global shift away from the dollar. Every warning sign that appeared before past collapses is appearing again. The numbers match, the timing aligns, the patterns repeat. The next meltdown won't be caused by one event, it will be caused by decades of decisions converging at once. The economic reset is not a conspiracy, it is a mathematical certainty based on debt, inflation, and geopolitical realignment. The real danger is not collapse, it is the transition to a new system that may reshape how Americans work, save, and live. And here's the final warning. Resets do not announce themselves. They happen suddenly after years of being ignored. Everything looks stable until it doesn't. Because the next chapter of the American economy is already being written. In 2025 may be the moment the world realizes that the old system is going to end, a new one is taking its place. If you want more deep dive investigations like this, make sure you like this video, subscribe to the channel, and turn on notifications.